Hi friends, this is CA Kiran Kumar. In this video, let us discuss about the new section, that is section 194Q, which was introduced in budget 2021, that is TDS on purchase of goods exceeding 50 lakhs. This is applicable from 1st July 2021 and the TDS rate will be 0.1% of the sum exceeding 50 lakhs as income tax. Actually, the provision is a person being a buyer who is responsible to pay an amount to any resident for such purchase of any goods or aggregate of such value exceeding 50 lakhs in any previous shall at the time of credit of such sum to the account of the seller or at the time of payment thereof by any mode whichever is earlier has to deduct an amount equal to 0.1% of the sum exceeding 50 lakhs rupees as income tax. The liability to deduct TDS is on the buyer. Now let us understand why this new section 194Q was introduced, the reason for inserting this section. The main reason for inserting this provision is TCS under section 206(1)(h), because under section 206C subsection 1(h), any person being a seller having aggregate turnover more than 10 crore during the previous year
and sale consideration
value exceeding 50 lakh in any previous year other than goods being exported out of India. And the section will be applicable if the seller turnover exceeding 10 crore. But there were instances where the seller turnover is less than 10 crore but his receipt from sale of goods to a particular buyer exceeding 50 lakh are there. Therefore, there was no liability of TCS on the seller if the turnover of the seller is less than 10 crores during the previous year. So, to handle the situation, government has come up with the similar type of provision for the purchaser via deducting the TDS. On a conclusion note, we can say one thing, that if the seller having turnover more than 10 crores and the sale consideration is more than 50 lakhs during the current year, then section 206C subsection 1(h) is applicable and the seller is liable to collect TCS amount. And if the seller turnover is less than 10 crores and the sale consideration is more than 50 lakhs during the current year, then section 194Q is applicable and the liable to deduct a TDS is on the buyer by deducting 0.1% rate. And now let us discuss about section 206AB and 206CCA. These provisions are relating to the deduction of higher rate of TDS or TCS to be applied if the transactions are done with a specified person. Then who is a specified person? As per section 206AB subsection 3, the specified person means a person who has not filed income tax return for 2 previous years immediately in which tax is required to be deducted and the time limit under section 139 subsection 1 is expired and the aggregate tax deducted at source or tax collected at source, as the case may be, is 50,000 or more in each of the 2 previous years. If all of these conditions are satisfied, then he will come under the specified person, and if you are dealing with such persons, then you are required to deduct TDS or TCS on higher of the following rate, that is twice the rate of the specified provisions of the act or twice the rates in force or at the rate of 5%. And immediately in your mind the question might arise that how to find this specified persons. No problem, government will very soon introducing the utility to find such non-filers of income tax return based on their PAN numbers. This provision does not apply in case where tax is required to be deducted under section 192, that is salaries, 192A, 194B, 194BB and 194 LBCR 194N. And if a non-resident who does not have permanent establishment is also excluded from the definition of specified person. So you can deduct at normal rates only. So this is for the day. Thank you very much. For more interesting updates, please subscribe my channel. Thank you very much.